Hey guys, it's Brad All with the All Property Group at Keller Williams in Columbia, South Carolina. And I'm here this month going to send out some information on the real estate market and doing a panel discussion today with a couple of other folks. And I'm going to let Gene, why don't you go next, introduce yourself.
Yeah, Gene Robertson here with Movement Mortgage in Columbia. Thanks for asking me on, Brad.
Awesome.
I'm David Cloutier with Keller Williams Realty in Columbia, South Carolina. Brad and I work in the same office, and appreciate you having me, Brad.
Awesome. Great to have you guys. So we wanted to talk a little bit. The reason I chose, or the reason we decided to do this together, the three of us, is I think we all three kind of have a pretty good understanding of, we do a lot of videos. I know me and David put out 2 videos a month. I think Gene might actually record more than that. I subscribe to your emails and get a good many video updates from you. So it's a great thing to have. And I think video is pretty popular right now. So we thought we would do this to kind of go over, the real estate market. We're kind of in a different time now. So how the pandemic has affected the real estate market. And we thought maybe this panel discussion would be a good way to do it. So I want to kick things off and throw a couple of questions out to Gene, since he's in the mortgage industry. I'm a big fan of letting people who do a certain job are the expert in that field. So there's a lot of questions I have about the mortgage industry that I know Gene can answer. So my first question right off the top is, what's the latest on mortgage rates? Like, how have the rates been affected by all this? Because we've seen a lot of fluctuation over the last couple of weeks.
Yeah, I mean, that's a great question, Brad. Rates have been all over the board. I mean, since this started, what are we in this now? 12 days or 7 days? I've lost count. I don't even know what day of the week it is, but
Right.
They've been all over the board. Literally one day they went from, up a whole percent, 3.5 to 4.5% one day last week or 7 to 10 days ago. But, all in all, the rates are currently still good. I mean, best credit scenario, best loan to value scenario, rates somewhere in the mid 3s, upper 3s, right at 4. What we're excited about, though, I mean, I think from what next week, what next month holds, I think we're going to see some, improvement over time with the rates, because obviously we're in a recession right now, and you cannot come out of the recession by raising mortgage rates. I mean, y'all know the housing market has such a important part of our economy, because it employs all different, fields of work, I guess you can say, trades, things like that. So we're not going to come out of this by, this recession by raising interest rates. So, I mean, I've been doing this 20 years, went through a similar thing in 2008. 2008 was more economic driven, whereas right now what we're going through is more, I guess you can say, biological driven. The economy suffered in 2008, it's suffering now, but it's suffering now because of this virus. So, I truly think we're going to come out of this by, getting lower interest rates. I mean, we're hearing low 3s, possibly high 2s for 30-year fixed rates, best rate scenario over the next coming weeks and months, to help dig us out of this recession.
Wow.
What about you guys? Obviously this has been a big change, for y'all as well, from a standpoint of how you go about day-to-day operation and, showing homes, taking buyers to see homes, letting your buyers in your listings, things like that. How's that changed the business for y'all?
I mean, I guess I'll take the buyer question. As far as buyers, I mean, personally, we've put a couple homes under contract in the past week. More so, the biggest change is just precaution and safety, where, especially with like first-time home buyers, you might bring the parents or family and, everybody kind of check out the house. Since we've, under the health circumstances, we're really just asking, the decision makers, the people who are going to be in there signing the papers at closing, to come check out the house. just to reduce the risk of exposure and stuff like that. And then, of course, carrying hand sanitizer and sanitizing before and after you leave the home and things like that. But I think, safety, of course, has been the biggest thing we've changed. But other than that, there's homes on the market still, and there's people still getting pre-approved and things like that. So I think that's promising moving forward.
Yeah, that's a good point. I've had, as far as activity, just general activity, I've had more. Last week was probably my busiest week this year, all of this year so far. So I had a listing appointment and quite a few showings last week. So I reiterate what Dave said about the buyer side, like just making sure that you have hand sanitizer, and we do that before, hand sanitize when we go in, when we leave, and just being smart about it. I think from the listing side, I'd even thought about maybe I've got some listings that are probably coming up like mid to late April. And I thought about having a table right there at the front door where maybe you might suggest that they take their shoes off when they tour the house. You could provide booties for the buyers as they come in, as they walk through, or just have a little table there with a station. And it's one more way to market yourself, but have your logo and just say hand sanitizing station or something with, and have some hand sanitizer, some wipes, or whatever, something like that you could use just to, I think all that it's smart, and it creates a sense of security when, that, hey, we can still navigate this world in the midst of this. You have to be smart. And I don't take it lightly at all, but I think you can navigate the world. It's just a new set of rules. You have to always be thinking about how you're going to adjust. You can't just do things the way we did, 3 months ago, 2 months ago.
And I think, like, as realtors, guiding people through buying and selling, as a buyer, it's a big purchase. As a seller, it's a big process too. So I think, as realtors, the more you can make them feel safe and comfortable where they can solely focus on the process and, not have to worry about touching something and being contaminated and stuff like that. I think that's a key to making people feel comfortable and safe so they can focus on the buying or selling process.
Gene, I had as it pertains to you, I'm curious you obviously have to work with agents. You have to work with clients, buyers. How has the pandemic affected your work and how you primarily in your relationships?
Right. Yeah. I mean, it's definitely different. I'm really a face-to-face guy, a hand-shaking guy, a fist-bumping guy. And as a male, we like to be macho sometimes. In my casual and personal environment and in my professional environment, it's been a big change. A lot of our business, including y'all, is done electronically and has been done electronically for a good while. So a lot of times I don't meet a lot of my clients until I go to closing. But there's still some clients that do want to meet face to face, and I'm fine with that as well. But we're doing more things now via electronic avenues versus the way we've ever done them. Just not going into the office, copying and pasting, converting things to PDF. I mean, it's changed the day-to-day operation. And obviously I come see you guys in the office, and now that most people are not in their offices, whether it's you guys or whether it's going to see my teammates or whatnot, don't have an interaction like that. So I'm doing bomb videos, group messages, group text messages, getting on these Zoom calls like this. It's what needs to be done to deplete that curve, I guess you can say, flatten the curve. How about y'all? What are y'all
I was going to say, lean to your left a little bit. You're breaking up just a little bit on your yeah,
I
lean
need the rabbit ears.
right. Send your kids up to the roof to
Yeah.
Do the
I
antenna.
need to tell one of my kids to get off their cell phone. They're taking up my Wi-Fi.
there goes the bandwidth. So yeah, so obviously we've all been affected by by that aspect of it to to have to. I think the key though is just to you have to always be adjusting, always be growing, and always you can't stay stagnant in the midst of this.
You can't ignore the fact that this is happening. I think we've got to stay vigilant in the changing times and adjust to the times.
Yeah, you can't think that you can do things the same old way and that still be effective. You've got to recalibrate how you do things.
Right.
So parting shots, anybody?
Well, I had one more question for Gene.
Okay, go ahead.
As pertaining to, the process and everything, obviously obtaining a loan a month ago is probably different than obtaining a loan today. Tell us a little bit about what is, came down the pipeline, what's been going on with that.
Yeah, that's a great question. I mean, this time last week, it was different. So you said a month ago, a week ago, it was even less, 5 days ago, we were doing things differently. A lot of things have changed with some of the product offerings that you're going to hear about out there that are not there any longer. Credit score guidelines and debt to income guidelines, have changed as well. I'll hit on what changed with us, and they changed with, pretty much everybody out there across the board. Some, stopped doing things, period. Some people out there have a credit score guideline at this and this and this. But what changed for us is these are all temporary changes too, by the way. So we've implemented these changes for the next 60 days, and then we're going to reevaluate things in 60 days. So, one thing that we stopped doing are state housing authority loans. We put a temporary halt on those for now. If we have one in the pipeline that was locked in and contract and all that, we're still going to close it. We're still going to close it on time, but not taking any new applications on state housing authority loans right now. And then, our government loans, our FHA and VAs, those we've got a temporary credit score minimum of 640 on that for now as well. And, just letting all this shake out in the wash, and hopefully this thing in 60 days will be out of here and we'll be back to business as usual from a standpoint of, where we were with those credit and debt to income ratio guidelines, things like that. I mean, it is what it is. There's, nothing we can do about it. We just deal with it and move on. And, hopefully the situation will improve in 60 days or sooner.
I think one of the most encouraging things you said, and it was actually I think on the first question, is the projected rates of what they, going, low threes and maybe even below 3%, which is just crazy.
Yeah.
So I think about that in terms of the interest rates have been low. That would even be like just ridiculously low. I mean, historical rate over historical rate, it's like, we'd be dipping into that realm again. But our inventory crisis is not going to change during this. I mean, we're not suddenly going to have more listings during a pandemic. So we're still going to, once we do, I'm confident we will get through it, as I'm sure you guys are. Once we get through it, the inventory is still going to be an issue, and it looks like it's going to be beneficial for both buyers and sellers still once we get out of this.
Yeah, kind of what I'm thinking, is it?
And now, I do need to temper the hopes on the rates. That's just my crystal ball, and I don't have a solid crystal ball, but like I prefaced that when I said it, we're in a recession. We're not going to get out of a recession by raising interest rates. So that's where I'm, coming from.
There's
when
indicators that typically are signs.
Well, I won't come back to you in a month and say, well, Gene, you promised me.
A 2.75 30-year fix for Brad.
Right.
So one thing that I would think would be different, like you said, in 2007, when the economy crashed, and several mortgages were in defaults and things like that, there was an abundance of inventory on the market. This is kind of a different case with it being with it being a pandemic. There's not going to be like, hey, just a flood of homes coming to the market. There's sellers who are cautious and, thinking about keeping their home off the market. Same way there's buyers keeping their home off the market. But, like this past week, it was a great house in the 150 range. We submitted an offer and there was, it was a multiple offer situation. So
Wow.
Great homes that are priced right, there's still buyers out there to buy them.
Yeah.
So, I mean, for a seller, I might take my chances, when there's less competition on the market versus, waiting until we get through this and flooding the market with listings.
Yeah, that's a great point. That's a great point.
It is.
So parting shots, anybody got anything they want to throw in here as we wrap up?
No, I mean, I guess I would say let's all, stay positive. We're going to get through this. Quit watching the news. Maybe watch it for 10 minutes to see what the weather is going to be, and then turn that thing off. I mean, we're going to get through it. U.S. is strong. The housing market is strong, and we will be back to where we were 2 or 3 weeks ago.
Yeah, I mean, I'm kind of thinking the same thing, and what I keep preaching to people is no matter where the market takes us, you sell for sellers, you're going to sell the home in the same market you're going to buy a home. So if you're selling high, you're probably going to buy high. If you're selling low, you're probably going to buy low and get a deal. And then, if you're a buyer jumping into the market, like I've said before, it's never the wrong time to buy the right home for the right price. So, don't let what's going on scare you into, possibly not finding the right home or, take advantage of less listings on the market.
Good stuff there. This is one I'll have to watch a couple of times to gather all the nuggets that were shared. But I appreciate you guys being a part of it, and looking forward to. I know I speak for all of us when I say that to our clients who we appreciate and value. I'm sure that you will see us reach out to you, probably not real estate or mortgage related, but just reach out to you here in the near future to check on you, make sure you're doing okay, see if you need anything, because that's really how we're going to keep busy trying to, get through this, is to make sure our folks are taken care of and in good health and don't want for anything. So I appreciate you guys, and thanks for joining me today.
Yeah, man, we appreciate you having us.
Together, man.
All right. Y'all take care.
All righty.
All right.